And it's sort of in relation to the same kind of spin that we heard on the consumer carbon tax, that these revenues are being recycled back into the economy. In your opinion, do you think there's enough transparency around that?
Well, thank you so much for the question. Again, just like the consumer carbon tax, that's what the government tried to tell Canadians for the better part of a decade, right? Don't worry, we're going to take $20 from you and give you $50 back. But people didn't believe it then, and people don't believe that type of messaging now. Yes, government transparency is always important, but even better is that the government get rid of taxes that make life more expensive, that don't work, and that could very well cost many Canadians their job.
Interesting, guys. Interesting. What can I say? It is what it is. Canada's knees deep and elbows up in taxes. We're really trying to work our way around all of these carbon taxes. We think that they're worth our while. We think that they're gonna do something for us, but really we're just using our elbows up like this as floats, keeping our heads above water, because it absolutely does nothing for the good of the Canadian economy in Canadian industry. And that's just a fact. There is not one nation on earth that has carbon taxes in which those carbon taxes have actually alleviated or done something for the good of the environment. Absolutely nothing. The only thing it does is it makes you literally less competitive on the world stage when you're selling anything that you want to sell, because that tax goes to the price tag at the end. Today is Wednesday, March 25th. My name is Miloš Krajčnik. This is the Canadian Sovereigntist. Have a great article for us today that I want to dig into, because it's actually kind of tying into what the clip I just showed. The CEO of National Bank stood up this week, guys, and he said Canada needs to ease capital constraints on banks to get more lending to small businesses, guys. He's identifying the problem, guys, but the solution he is proposing is it's too narrow, guys. And the system he is proposing to tweak was never built to do what he wants it to do, guys. And we're going to go into it. National Bank of Canada Chief Executive Officer Laurent Ferreira says the country's banks need certain capital constraints eased to encourage lending to small businesses. The United States is moving toward lowering capital requirements levied on banks, and the changes could release billions of dollars for lending, dividends, and share buybacks. The changes have prompted questions over whether Canada's tighter capital requirements disadvantage the country's banks and discourage lending, while Ottawa is encouraging investment to stimulate the economy. In recent years, Canada's banking regulator, the Office of Superintendent of Financial Institutions, or the OSFI, has hiked the domestic stability buffer, capital that banks must maintain to guard against the blow of an economic downturn, prompting lenders to hold on to billions of dollars in excess cash. So he's trying to see, he knows where the capital is. He knows where the capital is. So they have these, he says it right there, they have these systems in place, right? These regulations in place in case of some kind of economic downturn. The banks have a buffer. Right. And he's saying let's open up the floodgates a little and let's give the people some money to work with, right? That's essentially what he's saying. Mr. Ferreira said Canada should make more targeted reductions to risk weightings for loans to small and medium-sized enterprises. Risk weightings, the different levels of risk assigned to certain types of bank loans, determine the amount of capital a bank must reserve against its loan portfolio. That influences decisions about how much banks lend and to whom. Guys, and I want to stop right here and kind of deliberate on this, because there's a lot to unpack here, right? But I think one of the key things is that Ferreira he's asking the OSFI, guys, to reduce risk weightings for small and medium enterprises. That is the right problem, guys, and it's the right problem identified with the wrong solution, guys. And because the OSFI raised the domestic stability buffer, guys, to protect banks from economic downturn, to protect Canadian banks from economic downturn. The 6 that we have, that mandate is about institutional survival, guys. It's not about economic growth. It literally says it in the article. It's about protecting them, right, for economic downturns. So those are two different mandates. And they produce two different systems. And the Canadian system is about protecting the banks, not about stimulating growth. not about stimulating business, guys. And so a regulator built to make banks safe will always treat small businesses, guys, as a lending liability. Adjusting one risk weighting dial does not change what the machine was actually built to do. It just makes one setting slightly more tolerant while everything else stays the same. And Ferreira is asking the system to behave differently without actually changing the system, guys. That's not reform. It's really a request that he's offering. This is kind of really where that whole sovereignty, Canadian sovereignty angle comes through. Sure, you know, Canada has all of the domestic resources, the natural resources that any one nation can dream of having. Canada has it all, and we're not using it. We're not exploiting it to the degree that we should be, sure. But you can build sovereignty by boosting innovation. Innovation, when it's tied with capital, you get something phenomenal out of that, right? That's really how America has, for all of these generations, been spurring, been having that innovating engine happening. It's because capital is there to spur innovation in industry, guys. And when you have that mix going, you don't really need to have all of these natural resources, because you have talent that's there that's spurring things on its own, guys. And we could have that, but we don't, because our banks don't allow it. So when we talk about Canadian sovereignty, it's not just about the natural resources and just, you know, exploiting everything even more. If we did that, plus we had a good actual tax system, because Canadian taxes just kill you from every side, and you had a banking system that was there built to help spur economic growth and innovation, we would be unstoppable. We would be unstoppable. Like, the potential is insane. And we have the talent to do it. We have the schools to do it. We have the natural resources to support all of that as well. But we're just not doing it. Why do we never do it? That's the question. Why do we never do it, guys? I have my theories. I don't think people like my theories, though. But let's keep it going, though, guys. You can't lower the DSP and play that yo-yo and just say we need banks to be more aggressive, Mr. Ferreira said at a conference held by National Bank in Montreal on Tuesday. It's not about that. It's really about risk-weighted assets treatment for SMEs. U.S. President Donald Trump's administration has been pushing for deregulation in the industry. Last week, the Federal Reserve unveiled proposals to relax capital requirements for Wall Street banks, with the regulatory overhaul aimed at helping traditional lenders compete with non-banks and private credit institutions. The overhaul followed a 2023 campaign by major banks to oppose a plan under the Biden administration to significantly increase capital requirements. Proponents of Canada's financial system attribute to the industry's global reputation for stability, especially during the 2008 financial crisis, to its tight regulatory environment, but geopolitical turmoil and technological advances are drastically changing the risks facing financial institutions. Now we're faced with a very, very different world, OSFI Superintendent Peter Routledge said at a conference. Our geopolitical and technological and financial environment for the next 20 years is going to be very different from the last 20, so regulators are beginning to ask, do we look backward to make changes, or should we look forward? I think the better regulators are looking forward. We're going to stop right here and kind of unpack, because there's a whole bunch of stuff that was said right here, guys. This article points to Canada's banking stability during 2008 as proof the tight regulatory system works. That argument is actually worth challenging directly, because Richard Werner coined the term quantitative easing in 1995 while working as an economist in Tokyo. His original proposal was to direct new credit creation into productive economic activity, guys. That means small businesses, real investment, and industrial output. You can actually find an interview with him on the Tucker Carlson show. I highly suggest you guys watch that. But what the U.S. actually did was quantitative easing on financial assets, on homes. And Canada did the same thing, guys. Central banks bought government bonds, guys, and mortgage-backed securities. The capital inflated asset prices, and instead of building anything productive, The 2008 crisis was the direct consequence of credit flowing into asset speculation instead of into the real economy. Building homes is not building value because the home doesn't build anything after it's built. It doesn't create value after it's built. It's there for living. And that's what Richard Werner says, and that's exactly what we've seen. Canada survived 2008 intact and then spent the next 15 years doing the same thing in a more controlled way, guys. But that capital flowed into Toronto, flowed into Vancouver real estate because the risk environment inside a 6-bank oligopoly made mortgage lending the rational trade every single time. And small business lending is harder and riskier by OSFI's own metrics, guys, and less profitable than a condo mortgage. So that is where the money went, guys. Canada did not avoid the American mistake. It just ran it a lot slower. It was a much slower version of the same mistake that the US made. Over the past year, the OSFI has adjusted its treatment of specific types of debt in a bid to boost lending. In November, the regulator said it could lower capital requirements for certain corporate and real estate properties. It also lowered capital requirements in July for life insurers investing in Canadian infrastructure through debt or equity. Mr. Routledge said Canada's banks have also been proposing changes to the regulator's approach to capital requirements. As a regulator, we probably don't grant the full suggestion or agree with the full suggestion from our regulated constituents, but it comes from somewhere, the superintendent said. They're trying to make money, and they make money by contributing to the growth of the Canadian economy, so it bears consideration. We incrementally experiment and see what happens, and we consistently refine. Mr. Ferreira said the banks have an open and strong relationship with the OSFI, but he would like the regulator to make changes faster. The CEO said the world is dangerous and the government must accelerate its efforts to export its resources to global markets as geopolitical and economic tensions escalate. More must be done to reduce interprovincial barriers and bolster energy supplies. And that's hilarious. This blows my mind with Canada, honestly. It just blows my mind. The interprovincial trade barriers between provinces in Canada are tighter. Get a load of this now. They're worse than the interstate trade in the U.S., Canadian-U.S. trade, so it's easier for us to trade internationally, so send goods to the U.S. than for Ontario to sell to Saskatchewan. The European Union has smaller international trade barriers than Canada does interprovincially. And we call ourselves a sovereign nation. We're not even built to trade with each other. And we call ourselves a sovereign nation. And we're talking about Canadian unity. We don't even trade with each other, guys. It blows my mind. It blows my mind. But let's finish this off here. It says Canada should export more LNG and revive the Keystone XL pipeline project to the US. He said the cost to our economy is ridiculous and the only thing slowing down progress there is politics and nothing else. He said, referring to interprovincial barriers on becoming an energy superpower, it starts with that. Your security, your economic sovereignty, anywhere in the world, it starts with being an energy superpower. So I kind of agree with him. The only thing I would change is that we need to have coast-to-coast pipelines. Canada should only be buying Canadian oil, Canadian energy. Like, we shouldn't be importing energy from anybody. We shouldn't be buying US motor oil. We should have Canadian motor oil. We should be exporting Canadian motor oil to the EU, to Asian markets, to wherever. That's what we have. When you have something, you exploit it, you refine it, then you sell it. That's how you do it. But we don't do that. Why don't we do that? The Keystone Pipeline, yes, sure. We should support the US because they're right there. It's the largest economy in the world and all of that. There's literally 10 times more of them than there is us. And it's just a more robust economy. So yes, we should redo the Keystone Pipeline, but we should do the East Energy Pipeline as well. Why don't we do that stuff? It boggles my mind, guys. But the key to all of this, though, that I would like to, is that Werner's argument goes further than actually misapplied quantitative easing, guys. He argues that if you want to genuinely spur a productive economy, you need as many small banks as possible. Community banks have local knowledge, guys, local relationships, and local incentives. A small bank in a mid-sized Canadian city knows which businesses are worth backing and have every reason to back them. TD does not have that relationship, and they don't care to have it, guys. And Canada has 6 banks controlling the overwhelming majority of deposits, lending, and financial services in the country. That is not a competitive lending market, guys. It is an oligopoly with a regulator, and inside that oligopoly, every institution faces the same OSFI framework, the same risk weighting environment, and the same rational incentive to lend into real estate rather than into the productive economy, guys. Ferreira is asking the OSFI to adjust the rules for the same 6 institutions that produced this outcome, guys. Werner would say that this is the wrong solution to the wrong problem, guys. You don't fix a concentration problem by tweaking the rules for the concentrated institutions, guys. The architecture has to change overall, and notably, at the end of his own speech, Ferreira gestures at exactly that. When he talks about energy sovereignty and interprovincial barriers, guys, he knows the problem is bigger than the risk weighting adjustment, guys. He just stopped short of saying it, guys. And why all of this matters to Canadians is because if you own a small business in Canada, guys, and you've gone to a bank for a loan, you already know what the answer you got was. The system was not built for you, guys. It was built to protect the institutions lending into the housing market while you competed for whatever was left, guys. Ferreira knows something is broken. Werner diagnosed it 30 years ago. The difference is Werner said the architecture has to change. Ferreira is asking for a dial adjustment inside that same architecture that produced the problem in the first place, guys. Until Canada has a competitive lending environment and a genuine community banking, small businesses will always keep losing that competition to a Toronto condo, guys. And that is not a regulatory problem, guys. It's a structural one, and the targeted risk weighting reduction doesn't touch it, guys. That's all I have for you guys today. Hope you guys liked today's episode. Please like, share, and subscribe. Please leave some comments in the comment section below. This affects everybody in Canada, absolutely. So I'd love to hear what you guys think about Canada's lending environment for small and medium businesses. Stay informed, stay curious, and God bless Canada.
This is Canada. Maple syrup and La Cabin say, kick your ass all hockey season.